Christian Magoon, founder and publisher of IndiaETFs.com, with a quick update. This week, Indian markets have had a lot of events happen that have actually affected it positively. At the beginning of the week, the markets were positioning for the new GDP number out of the government for Q2 2011. The markets expected a lower number, but they really weren't sure how low it could go. Year over year, the number has been 7.7%, and the number that came out Wednesday was 6.9%. This was lower. However, it was in line with some of the lowered expectations. The market digested it and actually finished positive for the day. Later on during the day, after the Indian markets were closed, there was a coordinated effort by central banks in developed nations to actually increase liquidity into markets. This is a good thing for emerging markets, especially India, because the more liquidity that's in the markets, the more people are likely to take risk, and certainly emerging markets in India are riskier equity markets than developed markets. Thus, Indian markets rallied a little over 3 to 4%, depending on what index you looked at on Thursday. And indeed, most of the India ETFs were up accordingly, with ETFs like PIN and EPI up close to 4%. Going forward, it'll be interesting to watch what kind of environment happens in the global landscape, whether or not this liquidity introduced into the system will create a risk on trade. If that's the case, Indian markets are the most oversold of all the BRIC countries and should actually fare well. We should be seeing a bounce in the next couple weeks if that's the case. I'm Christian Magoon for IndiaETFs.com. Continue to follow us on Facebook, Twitter, and we'll see you again soon. Thanks.